Greetings, this is Dr. Jeffrey Scott, and this is my weekend market update for September 10th, 2023. I apologize that this is coming so late on Sunday. I was actually taken to the U.S. Open, as you can see, right in the middle of the court to watch Coco Gauff get her first major. Very exciting. Um, and then I flew to Santa Fe, and I just got here. So, sorry that it's late. My email address is hgsidoc@gmail.com. And I title this Is the Bull Party Over? Disclaimer, this is for educational purposes only. Anything I talk about should be considered education and not investment advice. I am independent. I am not affiliated with any software vendor or trading company. Tools demonstrated those that I use in my daily trading. I paid for all the tools I demonstrate. Trading involves risk. You are solely responsible for any investment decisions you make. I do get to speak at the Wealth 365 event where Rob Hoffman has been generous enough to let me speak and show you the tools of mine that he built into Wealth 365. I think Wealth Charts, which you'll see a lot of in this presentation, is one of the best tools on the market, especially for an inclusive product. And I'm so proud to be part of their program. So it's going to be the 9th to the 14th, free and only online. Here is the link to register, and I'm going to put that underneath the video in the remarks section. I also do a video on most days at stocksanddocs.com. Now, typically I'll do the video around midnight as I'm going to sleep because I'm going off to work in the morning. I don't always have time to do it again in the morning. So they post it at the site usually between 8:30 and 9 o'clock Eastern before the market opens. I always like to look at the markets, and although it was a 4-day week, the program says 5 days. I'm sort of stuck with that. Um, but if you look at, excuse me, over the last 5 days, in yellow are the indices. They're all yellow. All right. The Russell 2000 down 2.5%. The Nasdaq minus 1.9. The Qs, so the large cap Nasdaq stocks minus 1.4. Spiders minus 1.1, and the NYSE composite minus zero point 0.8. So even though we can see on Friday a lot of green, the numbers are pretty small, and they didn't reverse the damage done over the prior 4 days. Now, if we look back, now we're almost getting to lapping time. You could see going back to October 13th, the markets have had pretty substantial moves, especially the Qs up 46%. So the markets, not a bad week, but certainly a down week across the board. And if you look at the sectors, the only things that were up are energy and utilities was just up a bit. Now, when you see the third one there is staples, um, and you'll see as I go through that staples are starting to suggest maybe it's time to get a little bit defensive, but boy, they really haven't said much yet. If I look at the Q tools, which gives me a bit of an idea of how the market performed, we could see that you have more stocks here at the left than the right, which just says we've been in a weak market, but we don't have enough at 11.3 below the Bollinger Bands to give me a signal. And you could see 68% of the stocks are below the midline, so overall a bearish tint to the market. Now, if we look here, you could see on Friday as a day, 55% of sectors were down, 47% of industries are down, and 48% of stocks were down. So even though the indices were up, it wasn't a day that you probably saw your portfolio set an all-time high. Now, this is probably the most important one, which is right here. If we look over the last 5 days, you could see 91% of sectors down, 89% of industry groups, and 79% of stocks. So even though we improved on Friday, we're still in a tough patch for the markets. Now, I really love Nick Drendel's really inexpensive stock market workbook. And if we look at it and we look at the results from um, Friday, which was the 8th, and we're before the open, you could see on Monday small gains, Qs, spiders, diamonds, small cap growth, ARKK was actually down. Large cap, or excuse me, small cap growth IWO was also down. Except for the diamonds, most of the things finished in the bottom part of the range. If we look at what's above or below their 50-day moving average. Only the Qs are above their 50-day moving average. If we look over here at the industry performance, it's energy, oil, gas, exploration, XLE, energy number two, then you get cybersecurity. But everything else is either flat or down. So not a real impressive performance despite the indices being higher. Now, economics numbers, we've had a lot of favorable results. Suggestions perhaps that the Fed might be able to take it easy, yet the rates are going higher, the 10 and the 30 year. Now, this week we're going to have the CPI. Now, the CPI is going to have a problem, and that's the fact that oil and gas prices are higher. It won't be in the core, but it will be in the overall. Will that be enough to spook the markets? Recession in our near future, there's a question mark there. If you look at the 10 minus 2 and the 10 minus 3 yield curve inversions, when you get the yield curve inversion below the dark line, you get the gray band, which is a recession following. The interesting thing is, if that's going to happen, you'd expect credit to become tight, and we're not seeing it here. And the Philadelphia Diffusion Index, which is a measure of economic activity, which did dip below minus 20, which is typically associated with a recession, is now positive. So I spoke with a money manager last night at dinner in New York, and well, he's more an equity guy than a money manager. And you know, he pointed out there's a lot of things about this market which are unprecedented, especially the flooding by the Fed of all the money, during COVID. So I think question mark's the right thing. It doesn't feel like it's imminent. What about breadth? You could see stocks above the 200 drop, stocks above the 40 drop, 13-week new high, new low dropped. You could see the McClellan summation index and oscillator, all of them down, but none of them at a level where you'd expect a reversal in the market. So easing, but not oversold yet. The buckets, similar to what we saw in the Q Edge, this is from EdgeRater, 68% of the stocks below the midline. Bearish, but not bearish enough to expect a rebound. A rebound because of oversold. It doesn't mean you can't get a rally here. I just think it's more likely if we got a rally, it would be a bull trap and we're going lower. Now this is interesting. For the first time in ages, we had a Hindenburg Omen fire on the NYSE. And I'm looking here at just the common stock, which I think is a better way of looking at it. But if I look at the all the NYSE, I get the same signal. Notice that new lows have crept up, so have new highs. And to me, the Hindenburg Omen occurs when the pros are selling to the amateurs, us. And most major, no, all major market pullbacks, including the one we're living in now, have followed a Hindenburg Omen signal. Now, not everybody believes in them. A single signal is not confirmed. We need another one within the next 30 days. But it's another signal that tells me, again, that this, quote, bull party might be over. And so the question is the NYSE giving us a bad omen? Yes, pun intended. Markets turned down. If you look at overall, if I took every stock in the market, used the fundamentals from September 1st and at the close of the week, and asked based upon your ERG, which is EPS rank, relative strength rank, and group rank, was your performance, how did it relate to your ERG? And if you're a growth stock investor in a good growth environment, you'd expect to see the line to do this. That's not what we're seeing, is it? What we're seeing is most of the areas are below 0% with a couple of weird peaks, which is probably earnings related changes. It's also probably some of the energy complex, which has moved up from the left to the right. Did earnings matter? Yeah, interestingly, for the first time in a long time, stocks with better earnings outperformed. But the only group that was positive was the top decile. All the other deciles were very negative. Did relative strength matter? Interestingly, it did not. Stocks with the lowest relative strength outperformed. So I think we're still seeing evidence of rotation in an overall weak market. Know your news and earnings, CPI, PPI, jobless claims, production, sentiment are all potential market moving. And there is a Fed meeting coming up, and I think the September Fed is going to be looking for this data to give them a signal. Now, the PCE and the other things we've had over the last week came out um, quite favorable for the bulls, but I think we have some risk this week. Earnings, for the most part, a light week, but Oracle, Adobe, sort of beginning and end of the week. So if one of your stocks is there, it matters. And as I say down here, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So stock market registered broad-based losses on this holiday shortened week. Um, Apple really determined, as well as market rates and oil. Volume was not great. Apple was down 6% with the issues with China and the government saying no use of Apple phones. Semiconductors fell 3.2%, probably in sympathy with Apple. Oil is driving inflation concerns, and the Saudis and the Russians are not our friends here. Treasury yields rose. Energy again led, as I showed you. I showed you the news. I, I guess one good thing is the volume was lower, but we're in September. We'd expect choppiness. And that Hindenburg is surprising. Whether it means anything, time will tell. I continued this week. I entered the week long and exited the week less long, raised some cash. I've got tight stops in what I have. This is a tough environment, and anything I consider to take is going to be small. Um, Google and Amazon, for example, from the big cap tech, certainly look better than the others. Um, I looked at 1,000+ stocks on Saturday, and I did find some stocks that looked interesting, surprisingly, but I also found a lot more shortable stocks than I normally see. So I think we still have some risk here. It wouldn't surprise me that we bounce if some of the data comes out favorable, but I think the market party for the bulls is over. And the question is, have we set the highs of the year, or are we going to bounce after perhaps we get through the rest of September? Now, I just wanted to bring two oldies but goodies back. The first one is on the left. The blue vertical lines are market bottoms. The thicker line are the Fed rates. And the point of this thing on the left is through last year, we don't see bottoms until the Fed starts cutting. The Fed has paused, has not stopped yet that we know of. It could be. It certainly hasn't cut. The other thing here is the black box is the bear market you expect to see in the setting of a secular bull. And the red back here is what you expect to see in a recession. So I think we have to look and see what happens going forward. I think the slide on the left, I think, is the telling one. And there are a number of talking heads last week that I heard that actually said sell the first rate cut, which is kind of interesting. I don't think we're anywhere close to that. And just again, if you like these things and you like what I do, please subscribe, hit the alarm so you get notified when I post these. And I'd love to see you at the Wealth 365 event. All right, so now let me kill that. Save. Perfect. And make sure let's take a look at wealth charts. Um, why do I do these in wealth charts? I mean, some of you know that I've recently launched my indicators for a couple of other packages, TradeStation and TradingView. And especially for folks, well, I don't know why you don't have wealth charts if you don't have it. But most of the people that have purchased them already have my stuff in wealth charts. And they purchased them just because they have some things that they might do in other platforms. When I look at in the marketplace today, there's no harder working person than Rob Hoffman, no better cast of regularly scheduled educators in the program than what Wealth Charts has, and no program does what Wealth Charts. So Of course you're going to see me use it because it is my go-to program. So let's take a look. The first thing I have here is my weekly timing model, and you could see it's mixed. I have on the spiders, my price is above the 30 period moving average. My bond goes green, it gets a green arrow. If I look down here on the diamonds, same thing, price well above the MA, weekly MA, it's weekly charts, and it's a 30 period MA, and my weekly bond goes green, it gets a green arrow. The Qs are I put yield down because I'm worried about them. I could have just put a yield there. Why? Because even though the bongo turns red, price is still well above that moving average. So it's not over yet. But when you look at the Russell, it is concerning because price closed below with the bongo red. This is deterioration from where we were 3 or 4 weeks ago. So that's why I'm cautious. Doesn't mean individual stocks might do better than others. It doesn't mean we can't get rallies. I think it means that we have some risk here. If we go and look at the indices and we start with a daily chart, excuse me, a 5-minute chart, this is where the market closed the prior day, Thursday, and this is the first bar on Friday. So we opened up strong until about 10:30. We traded higher, at which point we top ticked and we traded down pretty much in a channel the rest of the session, closing in the upper part of the channel. So you're going to see big tails above and below. And if you look at the daily chart, you see a doji. Now, the concerning part is sometimes I worry that this 50, which we hoped would be support, is now going to be resistance. This is I think that's an EMS. Let me take a look at it. I've got wealth signals and EMS signals on these charts, and I think they're both set as dots. So let me fix that. Yeah, you had a wealth signal, sell signal on the daily chart, which is bothersome, a failure at the 50. Now, again, a positive day, up 0.15%. But I think there's reasons to be concerned. And are we going to lose the positive MACD? We're certainly losing some momentum there. So that's the spiders. The Qs, look at this. Also a doji with a topping tail closing below the 50. The diamonds on the daily broke through the 50 a couple days earlier, had an up day at 0.24%, but is below the 50. If we look at the Russell, boy, they pulled right back down to the 200. I think a break of that, which has held several times, will be concerning. Interestingly, despite the overall weak market on the week, the VIX is actually, let's take a look at the weekly. The VIX didn't do much. It's sort of an inside bar, although it was up 5%, but 5% on a $13 VIX is about 65 cents. And you could see on Friday the VIX was weak. First concern that really bothers me is this, which is the dollar. This here was a line, not my line in the sand, but really a line that going back to March of this year has been resistance. We have blown through the dollar, and God knows how far it's going to go. But that dollar, I think, really puts risk on this market. That's the first of the big things that worry me. As we look at gold and silver, they're going to be weak because the dollar is so strong. Oil is persistent, giving us a little bit of a flag up here. Be interesting to see what oil does. But with the Russians and the um, the Saudis cutting production through the end of this year, and with an empty SGR, or not empty, but a less full strategic gas or petroleum reserve, I think oil prices can go higher. Natural gas is doing nothing. Here's the other concern. If we look at this and go back, this captures the prior high, October 21st, 2022. When was the low of the markets? About 10/13/2022. What has happened since then, as you can see, um, sorry about that. And by the way, somebody complained that I took drinks of water or coffee during these videos. I apologize if that annoys you, but I live in the desert, it's dry. And if I'm going to do these, I'm going to have to take drinks as I go. But this is a level that I really think is dangerous. This was when the market reversed, when it started coming down. I think if we break above this band, we're in trouble. I'll leave it at that. You got to go back to 2007 to find higher rates. So I think rates are going to be important. The dollar is going to be important. Obviously, the news. So there's your three things that I'll be watching during the sessions. I looked at breadth and I didn't really see any signals. And again, if I've showed you this before, so I'm not going to spend much time on it. I like to worry about recessions because markets don't like them. But if I go to a monthly chart, when you when this TLT versus the spider peaks is when you get recessions. It's not peaking. In fact, it's in the toilet. So there's nothing here to suggest I have to be worrying today about a recession. If we look at the hourly sectors, the S&P 500 ratio charts versus the spider, the star is energy. It's been this way for a couple of weeks. There's really nothing else that is jumping up and saying, buy me, buy me, buy me. Although software stocks and some of the cybersecurity have looked interesting. I put yield signs on staples and utilities, not because I'm worried about them because they're falling. I'm worried about the markets because if these things continue to go higher, it's really giving a signal to the bulls that there's more risk coming in and the market might be getting more defensive than you're currently positioned. If we go into the stock scanner and we'll go to wealth scanner first, what you're going to see is a lot of energy. XOP, XLE, oil, dollar. And here's your software, gas, oil services, commodities, internet, FANG, hack, cybersecurity. But notice only two things are 800 or above, and they're both energy. And in the 700s, you don't have much either, and I wouldn't go much below 700 looking for strength. On the heat map on Friday, you could see NVIDIA, Tesla, and Meta, AMD, Netflix. Many of the FANG components were negative, so it's sort of interesting that the the markets were actually positive on the session with those big ones down, but which just tells me there's probably some broadening of strength in some of the non-large cap tech stocks. So now I'm sitting here wondering, what do I do? Um, I certainly have showed you nothing that has those three words, buy, buy, buy. We're going to look at some individual stocks. I think you got to be cautious here, and I think that S&P really is interesting how it traded up and failed at the 50. We look at the major markets, and I don't care if I'm talking spiders, if I'm talking Qs, if I'm talking diamonds, if I'm talking Russell, they're all below their 50. And that is something that I think is worrisome. Now, to be fair, the Qs are at the 50. The NASDAQ composite, I believe, is below the 50. So I think we're in a market that is dangerous. I'm going to watch that dollar. I'm going to watch the 10-year. I might consider some contras, but I think with the news coming this week, unless you really believe the numbers are going to spook the Fed, I'm afraid to go overly short as well. So the first thing I did is I looked at all the energy to see if anything came up, and I'm looking at pullbacks and uptrends. Why? Because I don't like to buy stocks that have run away. So if I look at a rocket, well, I even have any rockets here. So here's a rocket. Now, you could argue you've got a flag in here, and maybe this is something you could buy. Now, last week, it was on my buy watch list, and you could have bought it, and even though it didn't do much on the week, you would have, unless you bought it at the top, you probably would have done okay. But this one is too far away. It's not oversold by high-low jump, but it's oversold by me by where I put my stop. Now, I have no problem looking at this and saying, this could become cool. And maybe if I do something here and I break above that line, that might be interesting. So we'll watch that. I do like the next one, Dino. Now, it's not pullback right now. It's broken out and running, but this is one of the high-flying refining stocks, and I don't think we just had earnings. But these are a big winner of the high cost of energy stocks. So we broke out of the August highs. So we had a volume and a momentum dot here coming out of a squeeze. Relative strength and OBV look great. Dino is one that I'm interested in. There are a bunch of attractive services stocks. Here's HP. This is pullback, ran, pullback, and on good volume, two dots, relative strength and OBV. That one broke out. Valero is another one of the refiners. The refiners look good. Well, here was the line I drew a couple weeks ago, and it did break above that, and now it's moving. Big volume and momentum, great relative strength and OBV, and not oversold. Here is CNX Resources. This is one of the colon stocks. It's not ready yet, but I don't think there's a problem if I put, perhaps, let's just put a line on it. And I love these lines because I could set alerts on them. So I can come in here. I don't think that's where I want the line to be, but let me put this one here, bring this one down here, bring this one up here. A break above that, I might be interested in CNX. Um, Marathon Oil is looking pretty strong here as well. MR, they also have a refiner that looks good too. So there are some energy stocks that look good. My favorite of them is probably Dino, but are any of them going to show up as pullbacks and uptrends? Well, the COP actually gave it a little pullback here. That's why I put the line there. Amplify Energy, this is an exploration and production company. Good volume, but it's below the 200. There's HP. I don't know Obsidian at all. This is another low-cost exploration company. So there's probably some things in here that are interesting, um, but I don't have a lot of dots, which is to me part of my conviction model. If I look at pullbacks and uptrends and I change it to my combo buy list, and I'm not going to go really deep on stocks because I told you before I'm not going to be looking to buy a lot here. I want to see what the market does in the news. Healthcare is one that I think is a safe place if we go into recession, and one where drug prices are not going to come down with the price of oil. GSK is one of the big pharma stocks. It pays a dividend. And look at the move on Friday. Massive breakout, massive volume. 1, 2, 3, 4 dots. So gap up volume, breakout momentum, relative strength and OBV. And it's not surprising because it's been basing well off the highs. Its high-low jump is not a problem. Now, overhead supply probably is, but that's interesting and probably would be worth checking on news, although none of the news flags went up. Guidewire is one of those software companies, and this is what happens. You had earnings on Thursday, and you're going to see a big beat, 94% beat. I don't know anything about this company, and then what happens the next day? Raises to 100, raises to 96, raises to 100, raises to 95, raises to 90. So the stock is 94. How much further does it have to go? You can see here it was $130 before, but great earnings. Earnings are behind them. Smartsheet, that looks like an earnings move as well. 128% beat. And again, you look at to 50. This is one of the great features of wealth charts. I've got the news and earnings, the analyst changes. So a lot of upgrades here as well on Smart Sheet. What I don't like is where it closed. All right, the next one down is Air Products and Chemicals. Kind of a lumpy, bumpy chart, but you've got a pullback into the 50. Okay volume, breakout and momentum, relative strength and OBV. This is one that looks interesting. What else did I see that I really liked here? Carrier Global, an industrial play, pullback and a breakout on big volume. Somebody raised it to 60, but it's already at 60 and there's no earnings hiding underneath that. So there are stocks out there that you can buy. I'm not sure you're in a market where you want to be buying much. I stayed at the Conrad Hilton in Midtown. They were packed. Look at the Hilton hotels. Pull back into major moving averages. All right. Oh, EMS signal, volume, breakout and momentum, relative strength in OBV, and the high-low jump is not too extended. Somewhere in this list is probably Marriott. Let's see if it's MAR. S came from, and so we could look at perhaps Marriott International, and you see the same thing. I travel a lot. In fact, over Labor Day weekend, I stayed at two Embassy suites in San Francisco, which are Hilton properties. Why? Because I went to the IBD meetup for the Joint Bay Area, which is just an awesome 2 day meeting. Um, and I went to the wrong Embassy suites. Both of them were packed. I stayed at a Marriott in Gaithersburg on Wednesday. It was pretty busy, and Thursday and Friday and Saturday at the Conrad in New York. These hotels are popping and their service level is down. So I wonder if, even though some of their costs have gone up, their staffing costs perhaps have not because they have less staff. I don't know. But what I do know is here's a flag on the weekly, and we're breaking out of this right here with breakout and momentum, good relative strength in OBV as well on Marriott. So there are a number of things working. Those are some of the things that I like. Now, I do put together a buy list that I'll be watching Monday. I'll stick these in typically into a radar screen and I'll watch what happens with them. And let me just see if there's anything here that I wanted to call out. I mentioned that Amazon looks at an interesting place. It had pulled into the 50. I thought it was going to go after Thursday, so I thought Friday would be good. It wasn't a bad day. It was up 0.28, but that's what I'm in and I'll be watching. Arlo is one that had a big run in the past. A break above the 50 I'll find interesting. We talk a lot about CEIX. This is Consolidated Energy. And this is one that broke out of a flag and has had a nice move up. This is one that's been strong. Coal. Hard to believe that's the future of the world, but with oil prices at where they're at, here is CrowdStrike, which will be in the computer security world. Notice that here you had an earnings beat of 32%. Here you had upgrades galore. There's let's see, 170, 192, 1853, 180, 185, 185, 200, 167. There's 235, 175, and 190. So here you broke out off of the moving averages, have a nice steady rise here on volume, and you're getting a little overbought, but I think that one still looks interesting. I showed you Dino already. Anything else that looks interesting for the long side? I showed you Hilton. IonQ is a AI stock, a low-cost one that's been one of the huge movers of the year. If the AIs turn around, this is one that you might want to be looking at. Another one within the group is SMCI, and you could see this one, breakout above the 50. This one could be interesting. It's already starting to move. It was up almost 5% on Friday. And with oil cost high, those things that ship them are going to do well. And you can see coming out of a squeeze here was Scorpio Tankers. So those are some of the things that I like to the long side. I mentioned there were plenty of things I found to the short side, and this is just a list of some of them. Now, just what I actually call this is more as a screen and a signal generator, because if I'm right and these stocks continue to trade lower, then that's going to give me a signal of what to do with my holdings. Some of them are potentially shortable where they are. For example, um, Regeneron, let me just make sure these are the right ones. I think those are last week's. So let me make sure we clear that list. So a lot of people wonder how you can manipulate the list and wealth charts. I'm just importing them from a CSV file, which is something that I create with in Excel. And I have a bunch of them here. So here are the shorting candidates. Let's see what this looks like. Maybe those wasn't it, or maybe I didn't get them all set up. All right, I'll have to go back and look. But look at Royal Caribbean. This thing has broken down. Um, PSAR is negative. Look at relative strength and OBV. Robert Half International and employment thing, as if employment rolls over, is this thing going to continue to fall? I don't know. IQVIA Holdings, probably not right here because it's above the 200. Again, most of these I've picked because they've already started breaking down and I want to get a signal of what the market is doing. I just wonder if I pulled the wrong list here. But anyways, these are some of the things that I'll be looking at. I think you can see why I like wealth charts. I can manipulate lists of stocks. I can look at the markets. I can look at my timing. And I have a very simple tool that allows me with that scanner to very quickly identify some of the leading stocks in the market and start to look at what I might be interested in going to buy, long or short. Have an awesome week. This could be a very interesting week in the market. I heed the Hindys when I see them, and that's got me a little spooked. Have an awesome, awesome week. Again, sorry for how late.